Hey, my name is Keith Hall. I'm a CPA specializing in helping small businesses just like you. I've worked with many small businesses over the last 25 years. A very common question for most all of us is, what about the business use of my car? Is there a deduction available for that? And I think that comes up so often because we all use our car for business. Now, oddly enough, even though we all do it, it is one of the most commonly overlooked deductions by many small business people. And I think the reason that is it doesn't show up in your business checkbook. You drive your car to the post office, to the office supply store, you certainly go visit your clients and your customers, but it's easy to forget about those miles actually representing a tax deduction. So you got to be careful not to miss that. Now the good news is the IRS gives us two methods to determine the deduction we can take on our tax return. Now the first method is called the standard mileage rate method, and it's exactly what it sounds. The IRS gives us a set amount per mile. We keep track of the business miles we drive, those things like going to the post office, to the office supply store, our customers and clients, those type of things. We keep that in a mileage log. Then at the end of the year, we take the total business miles we drove times the IRS standard rate, and that's your deduction. It goes right on line 9 of your Schedule C piece of cake. The second method is called the actual expense method, and that's also exactly like it sounds. You just keep track of all the expenses you spend to maintain that car. So that includes gas and oil, your inspection sticker, registration sticker, insurance. If you own the car, you're going to have a depreciation number. If you lease the car, you can use your lease payment in that total, but you add up all of the expenses that you incur to maintain that car. Now you still have to keep track of the miles that you drove, but now you're going to keep track of the total business miles as a percentage of all the miles you drive. Then you take all those expenses that you added up, multiply by that business percentage, and that's your deduction. Also goes right on line 9. Now the best news of all is the IRS lets us use either of those that is best for us. So you can even calculate the deduction both ways and use the one that's bigger. Now that sounds great. As a general rule, the more miles you drive, typically salespeople, those type, the more miles you drive, usually the standard mileage rate will probably end up being a higher deduction. The lower amount of miles you drive typically would then end up providing a bigger deduction than the standard. The reason there is a lot of those expenses are just fixed amount, like the lease payment on your car. So that's kind of a good rule of thumb. Now, keep in mind that there was one thing in common for both of those methods, right? And that one thing in common was you gotta have the mileage log. Okay, if you don't have the mileage log, you're not gonna be able to take the deduction. So make sure you keep a spiral notebook in your car, keep a pen there. Anytime you go driving around for business, just make a note. There's other options as well. You don't have to have the spiral notebook. You can keep track of those on your PDA. There's even iPhone apps using the GPS function in your iPhone that help you keep track of the miles that way. Doesn't matter how you keep track of them, but you must keep track of the miles. At the end of the day, you're going to have the mileage log. Use either of those two calculations we talked about, and that's what's going to give you the deduction. Now, lots more information out on the website to help you with this type of information. Publication 463, you can download that right here from mahalodotcom. You can also go to the IRS website. Lots of detail in there about how to keep track of the business miles of your car. Main thing, make sure when you go on a trip for business, even if it's just to the post office, make sure you include it in that log. Okay, that log is the #1 thing to keep track of. Keep track of the log, remember to take the deduction, and when it's time to do your tax return next year, you're going to end up paying lower taxes because you kept track of the miles. So that's the way to make sure you get the maximum deduction, drive the car, generate new jobs, get new customers, and we'll all be better off. And I hope this was helpful. Thanks for watching. Don't forget to check out the links above and the links below for more detail. Also, make sure to rate, comment, and subscribe. If there's something else you would like to see, just let us know. Email us at request@mahalodotcom.